Hi everybody, I am Robschild and today is Thursday, July 31st, 2025. Before we get to our main headline, I want to start with bringing up the PCE and jobless claims. The Federal Reserve's supposed goal is 2%, and we are above that at 2.8% in the core year over year. This is the Fed's favorite way to see it, and I also wanted to look at this at a chart. Ever since September of 2022, this has been going down, and then since 2024, that's why some people have been saying inflation has been sticky, and it has been. We've been basically at 2.8 for a year and a half while still being restrictive. Besides the Fed saying that they are restrictive, the 10-year note yield also says they are restrictive because the 3-month minus 10-year is still pretty much flat around zero. When front-end rates are elevated to the rest of the curve, it means, yes, the Federal Reserve is currently trying to slow down that inflation. Next, we have our weekly report of continued claims, seasonally adjusted. I wanted to just bring up this chart just to remind us where we are. These are continued claims, so week after week, people continuing to file for unemployment. From May of 2024, it spiked up. It went sideways for a while until around June of 2025, very recently, spiked up. We were wondering when it was going to stop, and it did stop, and it's been going kind of flat for a little while. It's hard to say where it will go from here, but I'm hearing some people note that anything really above the 2 million mark is sort of a psychological breaking point, and we are very close at 1.95 million. If that does spike up again, it raises the risk of an inflation greatly. Onto our main headline of the day. Liberation Day Take 2 is tomorrow. Markets are not ready. The difference between now and Liberation Day before is that we know what the tariffs are going to be ahead of time. Liberation Day was sort of a shock announcement of much higher tariffs than the market expected, and right now we have the expected tariffs pretty much summed up right here in this table. And they seem to be changing on a basis minute to minute. There was an update on Mexico today, for example. But I still think it's worth mentioning the last time we got this many tariffs all at once hitting the tape, sell the news kind of situation, the market tanked at the beginning of April, 20%. So I'm expecting a heck of a lot more volatility tomorrow than what I see across markets. But then again, we have Treasury Secretary Scott Bessent saying, don't panic, everybody. Everything's going to be just fine. And reminds us that the taco trade is still in full effect. The Trump always chickens out trade, in other words, because, we don't know. The tariffs might be on for 3 days, maybe 3 weeks, maybe 3 months. Impossible to say. AKA, if the stock market falls 10% tomorrow, we got your back, guys. We'll hit the pause button again. That's pretty much the way that I see it. And it seems maybe that's how markets feel today. Well, again, we'll see what the real effects are tomorrow. Another little economic data piece that came out yesterday that I think gets easily swept under the rug. Not many people talk about it. It's the M2 velocity of money. In other words, how fast does $1 go from one person to another? It's still falling. It was actually reported yesterday for the initial, this is revised on a monthly basis, but for now, Q2 now shows 2 quarters in a row of falling M2 money supply velocity. And while you do have periods of falling velocity without recessions, every recession includes the fall of the velocity of M2 money stock. Every single recession does. So while this deceleration or slowing of the money moving from person to person doesn't mean that we are in a recession. It's just another one of those cracks, and it's not a good thing. Just to remind everybody, scrolling out, this is in a range that's lower than it's been almost any time in the history of this chart as far as the ratio goes. Meaning we have tons of more money that we printed throughout this period, and it's not moving very much, not nearly as much as money normally moves since the 1960s. Moving on to our community topics, what moves did you make today and why? What did Robschild do today? Well, I bought some UVXY calls with strike price 15.50 that expire tomorrow. Very, very cheap, especially considering the potential volatility that we can have tomorrow. The VIX is not just below 20, but a good deal below 20, only at 1671 right now. Not pricing in hardly any volatility. And since I'm expecting more, I decided to bet a little bit of money on it. The fund I use is UVXY. I don't go into this fund directly because I believe it issues a K1. And it's currently 6 cents away from the strike price. So anyway, the other thing I did today was I added to a stock UNH. It's the largest healthcare company in the United States. It's been having some concerns over basically regulatory things going on. We reached the bottom of the lowest price it's been now in a long time. Very well today, so that's why I wanted to get a little bit more. If I am planning to sell this when it gets to what I consider to be a fair valuation at $333, because that's where it's equal to a 10-year average earnings PE of 25, which is a Graham calculation for fair price of like a leading company. I mean, this is the leading company of this industry, so I thought I'd share. Coming up, not only do we have the tariff tsunami begin, we also have the big employment-unemployment report, which could add volatility to markets tomorrow. If there's a lot more people that want work and say they can't get it, that is the biggest red flag as far as economic data can go. Thank you so much for watching, subscribing. I know there's a lot of new viewers to my show. Thank you so much for your subscription. I really appreciate it. Your comments and your support to the channel. No changes to the daily reminders, macro views. See my website in the description to read through them. And no changes to the crystal ball readings nor the Robschild portfolio, except for the volatility calls I got today. On to some charts. We'll start with the SPX, the S&P 500, dropping by 0.37%. Not a very large move, but notably opening on this previous trend line that we have here, and then closing below the previous 1, 2, 3, 4, 5 trading days. So that's a very bearish looking candle. I said on Tuesday, I think the top is in. I still believe that, and I'm right so far on a closing basis. You know, on a red candle that closes at the bottom of the candle there. I think it's going down from here. Credit spreads had a little bit of a contradictory move today. HYG divided by SPY actually going up a little bit today, with stocks going down generally. This is unexpected for me. I would expect credit markets to front run more volatility, but apparently the credit markets see too much volatility right now. I don't think that's going to last, but we'll see what happens. Inflation expectations represented by TIP divided by IEF dropped today. So while the PCE numbers came out a little hotter year over year in the core than expected, it's saying that the areas in which made it go higher doesn't matter to the market as much. Inflation expectations actually dropped today. With really good news coming from Meta and Microsoft today, the NASDAQ, the triple Qs, actually they opened higher but ended up closing down on the day, also engulfing the previous 4 or 5 trading days like the S&P 500. I'm not going to be surprised at all if tomorrow functions as a rug pull type of day. This is why I'm holding my short on QQQ with SQQQ. The engulfing candle plus the events tomorrow seem like a perfect setup for it to go lower, but we'll see. Last chart of the day, NEGG, which is Newegg Commerce. I only want to bring it up for educational purposes. I never talked about this stock on this channel before, but I did actually have some of this before this run up. If you're new to trading, new to stocks, this may have gotten onto your radar. In May, it was $3.50 and now selling at $63. This is an online company that sells used computer parts. Well, Robschild, why is it going up so much? Should I buy it? Not advice, but it's a bit dangerous, is what I'm going to say, when the insiders sort of own so many of the shares that they can control when these spikes happen. If you look throughout this stock's history, this is not its first rodeo. In fact, from its IPO on an adjusted basis, opened at $2,000 a share, quickly going down to $200 a share, and then just having all of these spikes over and over and over again. I don't mind buying stuff like this when it seems like it doesn't have any attention for a long time, because I know that they're going to do it again. They've done it 20 times in the past, and they're probably going to keep doing it. Of course, if you got in at the wrong time, like after the 21 spike to $1,500 a share, and you bought in after it had dropped to its all-time low of something like $40 a share, well, that wouldn't have served you too well, since it went all the way down to $3 a share before going back up recently to 63. When you see companies do this, survive for so long, and over time drop to obscenely lower and lower levels, it has a lot to do with the company simply deciding to raise capital by just selling more shares. They make up shares and they just sell them. It dilutes the stock. So more of an entertainment lottery ticket type of situation than anything else. And that's all for me and my crystal ball. I hope you enjoyed. Thank you for watching, and see you next time. Robschild.